All right. Good morning, everybody. Made it through the weekend. I'm kind of light on the data today. Not necessarily a bad thing. There is going to be a bank speaker at noon, but it's Bank of England, so not, necessarily a really big deal. There are additional auctions today, as we'll see when we get over to Thinkorswim. There's been a lot of headlines over this balloon. So far, it hasn't necessarily crashed anything, but just keep in mind a headline can come out and flash crash the market at any point. Crashes don't always go down. We can crash up. If you guys remember when the Russian-Ukraine situation first kicked off for the first 2 or 3 weeks, any headline suggesting that the war was going to end or that Putin was looking to cease hostilities and the market would just explode higher. It might only last for like 10 minutes and then we'd start to fade back out of it again once they realized that it was just a fake headline, some more misinformation news coming out. But the market was really responsive to any kind of update on that situation when the situation first started to unfold within those first month or two. The same things can happen at any time on any topic. Right now, it seems to be this balloon issue. If, a misleading headline, maybe some misinformation, just an article that has a bit flamboyant headline can cause the market to, gyrate a little more than normal. So just kind of a heads up, keep your eye on this story. All right, we have additional auctions today at 11:30, and that's really about the extent of it today. So once we get past those auctions, you're pretty much good to go for your 0-day trade. We have the FOMC in March. So, it's a little more than a month away. And right now, the market is going to be parsing through every little data point. It's important when you're looking at those data points to keep an eye on the revisions. There's been more than one analyst that's pointed out how we'll get a headline number, and then later on, the number gets revised up or down into a more accurate level, but it's all done wink, wink when nobody's looking, right? So when I was checking out things this weekend, I came across an article by Mott, M-O-T-T, and what he was discussing was at the end of the FOMC, Powell basically was asked a question that said, the market is pricing things like you're going to pivot. It doesn't believe you. And he said, well, I'm not going to waste my time trying to convince anybody. We're not going to pivot in 2023. It's an interesting point of view. Keep in mind what I've said before is he can't say they're going to pivot, even if they're going to pivot, because the market would explode higher. So he can't imply at all that he's going to pivot early, even if he is going to pivot early. I don't know that he's going to pivot or pause. Right now, we just got to take him at his word, and his word is we're not going to pivot in 2023. Looking at the target rate, though, it does look like we're going to quit seeing rate hikes at the July or the June meeting, because we will be in, near, or around that target rate. We still have a gap to fill. Right now we have 2 gaps to fill. We gapped down Sunday night and we have not come back up yet to close that gap. Close, but close doesn't count. All right, volume sitting at around 125. It's right within our norm, so no issues on the overnight cumulative volume. Just get that out of the way. The initial balance was very narrow right up until around 3:30. Now the kill zone starts at 2. So if this was a move from the kill zone, it would be late. So it's not that. Instead, at around 3:30, we started to get some news, maybe 3 o'clock. Started to get some news that took the market down a little bit. You can go back to Finance Juice and maybe catch what came out around 3 o'clock that did that. But we do have the dollar up, continuing to go up. At least we're doing better than the early part of last week. VIX still stable in the middle. The Dow and the S&P actually have the same shape this morning. It has been a lagger through most of that explosive move last week. We're seeing more and more of a disconnect between what's going on with the Dixie, the DXY, the dollar index, and US dollar Japan, US dollar China. I think we'll circle back to that. For the moment, we have an MDP. It's a missed daily pivot. So not only did we gap down and not fill the gap last night, but we moved farther away from the daily pivot. So for the moment, that's an MDP. The ADR is 1.6, and we are underneath the weekly pivot point at this point. We're still holding above the first ADR or the ADR half, 41.01. A full ADR to the downside would be 40.68. No market maker move this morning, at least not yet. If we mark out all of the ADR, you can see it almost covers all of Wednesday, except for during the FOMC when we gyrated to the downside and then big sweeping spikes. So if we were to just set those aside for a moment, today's ADR covers all of that Wednesday price action. And I had talked about how if we were going to stay bullish in the short term, we really needed to hold above that big Wednesday 50% mark, right? If you were just to measure all of Wednesday and set your pivot in the middle, We needed to hold above that. Now we can dip below it. We just don't want to close on the day below it. We're there. Interesting how price stopped right there, isn't it? So that's the level that it needs to close above on a daily basis. Otherwise, we're going to start looking for bearish opportunities. And hopefully this provides a little bit of context. We're not bearish. Last week, we had really good job numbers. We had multiple data points last week implying that we're certainly not in a recession. And even though things are slowing down a little bit, everything out there looks still very robust. The unemployment level was the lowest it's been since 1969. So for the Fed's stated purpose of absorbing all of this money floating around out there, wealth destruction, job destruction, they're failing at their mandate. Kind of implies that Powell's not going to pivot since they're not accomplishing their goal. Yeah, it is Nixon, isn't it? Ten-day, 30-minute volume profile. Somebody asked the other day why I have the profile set to 99%, almost 100%. And the answer is honestly just a visual one more than anything else. I don't use the value area high and the value area low lines other than for where they represent price action has gone. If we were to dial the volume profile down to 70 to a 1 standard deviation, it would look like this TPO here, where we have this value area high and low and point of control in the lower port, showing that this is where 70% happened and that this is 30% up here. Well, that's all well and good, but what am I going to do with that? Right? Like I don't get any benefit from knowing where the 70% is at, because we're on a 10-day, 30-minute, right? It's not like we're going to pull the trigger because of something that we see here. So visually, what I need during the morning briefing, at least, is where this point of control is at. And that wouldn't change no matter what we put the setting on. And then I really just need a marker off of the high and a marker off of the low and all of the volume within it. So I set it to 99 just for the visual. Otherwise, what we end up with is something that looks like that. Now, there's nothing wrong with this, right? It's fine. There's nothing wrong with it. In the indicators settings, it offers us an opportunity to mark the absolute high and the absolute low. So we could do it that way too, where you go into profile high and profile low. it would just add that white line up there. And of course, one down here. So it doesn't really matter either way. The main thing is, where's the point of control? Where's price now? And is there any classic shapes, the D, P, lowercase b? And then are there any air pockets that we need to be concerned about? And we talked about one of those air pockets last week. If we were to break below, say, 4130-ish, that there's a nice hollow area and not really much to slow price down or to catch price. And I pointed out this pivot point and said it was very likely that if we got there, it wouldn't hold anything up because there's no volume behind it, right? There's no, the profiles are very shallow there, and that we would very likely move through this area really quick like we did back here. But we actually did find a little bit of help there. Surprise. All right, the VPOC that we carried forward from Thursday was tagged on Friday. It's a level that we couldn't get through. So we don't need it anymore. We've tagged it, taken it off the table. We still have another one at 4230. And we have a lower one at 4070 something down here, 77. And we have a new one from Friday. So any break to the upside today, keep your eye on 4147. It's the VPOC from Friday. We looked at the box last week on Friday, but of course we looked at it when the market was still open, and it doesn't get set into stone until Friday after the close. But this is the size of the box this week, the week after FOMC. And if we take it and put it into perspective of how big the box was last week, you can see how much more it is. So they increased the volatility this week compared to last week. I don't quite know what to think about that. You would think the week of the FOMC would be a highly anticipated, highly volatile event that would have raised the implied volatility and increased the box size way more than this week. Nope. Right now, looking at the 10-week, we've rounded over and started coming back down again. Generally speaking, it doesn't very often begin coming back down to the 10 and turning around before completing that move. It does happen. We rounded over here and we did not come down all the way first, right? Instead, we came back up and held that for a while and then came down. But generally, once we've made our move above the 10, we come back to the 10. Right? That's generally how it goes. So more often than not, once we begin coming back towards the 10, we make the trip. Now here, when things were just crazy bullish, like that recovery off of the 2020 lows, the March lows, and we rallied like a year and a half, there were plenty of times where price started that rounding over, started coming back towards the 10, and then just rallied right back up again without getting there. That was a crazy time. Since then, we've seen the more normalized move where we rise up and over the 10, then we roll back, come back and like test it, validate it. So we've rolled over and we're headed back towards that 10. On the daily, we're nearly there. We were more than 2% away from the 10-day. Now we're less than 1%, around 0.75% away from the 10-day. And again, it's that rollover effect. We might not go all the way back to the 10, but it's likely that we're going to get close. Right? Like we can see back here when it rolled over, it got really close to the 10. This is kind of implying that we're still going to at least drift lower today for the early part of the week, which kind of makes sense. We're a little light on the econ. Now, of course, news can affect all of this, and we're just talking about how historically price reacts when it's above the 10. Right? So obviously on a day-to-day basis, price can do whatever it wants. That is the 10-day moving average right there, plotted on the intraday. It's at 40.94. It's a little lower than the ADR half, but higher than the ADR full. You can see how we've gone through it before. We just have to close above it by the end of the day. Same thing back here. We went through it, closed above it by the end of the day, tagged off of it, closed above it. The thing is, how far we're sweeping away from it each time is what we're really keeping track of. All right, Brent crude and oil broke that lower trend line that we had talked about last week, closed below it. At least WTI did. Brent, well, yeah, I guess they both did. Brent's already back above it, though, so far this morning on the intraday. So we got to keep our eye on that, see if it's going to run divergent or stay in line with WTI. So we're still looking at weak energy out there. All right, Asia closed down on the day. Not too bad, 1.6-ish. Europe is still open, but down on the day, less than 0.75%. It's a nice little scoop pattern, and there has to be a little bit of an expectation of a handle here, right? So like nice little cup. Maybe we're just seeing the pullback for the handle. Now we've got the Dow versus the S&P. And, it really just kind of tells its own story right there of how things are out there, how divergent everything is. Somewhat, this is a good thing, because if everything starts to sync up, if we begin to get a high correlation coefficient, it'll be obvious and the move will be violent. So, it won't be subtle if we line everything up, right? Get our ducks in a row. We continue to hold this divergence, then we're very likely going to continue to see tech versus finance and maybe that capital rotation through energy and consumer staples. We've still got a lot going on with commodities too. This morning, however, at the moment, they're both doing the same thing. The Dow maybe a little more movement than the S&P, but they have the exact same candle for the moment. This is a daily chart, so we're looking at both of these with no wick across the top, a little bit of a recovery off of the low of the day so far, and just a continuation of that rollover from last week. All right, the China ADR group constituents are down the most this morning, and behind that, semiconductors and then tech. And that kind of makes sense considering how much the NASDAQ moved. During that article that I mentioned earlier, they referenced how the NASDAQ was so far away from the curve that it exceeds levels we haven't seen since 2008. So the NASDAQ is just a little bit of a runaway freight train at the moment. It kind of implies that if we do start going down, it would be the better index to short at the moment. All right, we're getting a little bit of movement in USO. Crude and XLE. So in the energy space, it's not much yet. Kind of got to let it unfold a little bit. But we broke a major trend line in WTI and Brent. And now coming up to test it from underneath, like a little bit of a Busby. Makes sense. But I don't think we're done. I don't think we're going to head back up yet. And nat gas closed on the week lower than our major trend line. We're going to be looking for, a little bit of a knee-jerk reaction, especially if it set new lows, which it didn't yet. I mean, it wicked lower, but 822 is the low that we have over the last 5 years. We didn't close lower than that yet, but that's kind of the concern, right? We're there. Historic levels. And we do have a market maker move on nat gas right now. And marijuana is the other one this morning, pot stocks. Looks like ACB is going to be testing that 20-week. It's trying to get a 10-week crossover. That's pretty bullish. And they certainly don't look very healthy, huh? You know, speaking of Google, I'm glad you said that. Thank you, thank you. With this whole thing with Chat GBT and Microsoft buying it up, and just how much eyeballs and attention are on AI right now, there was this really great article that came out on different AI companies, some really cheap companies that, you know, we're talking nearly penny stock size companies that are worth a look, right? Since there's just so much attention going on there. But on the Google side of things, the article mentioned how Google has been working on that space since 2017, and they've already developed things that could challenge and or rival the Chat GBT space with apps that are fully functioning, ready to go. All they got to do is release it. And the argument is, well, why haven't they released it? And of course, Google really protects its name. It protects its brand. And if you were using Chat GBT before the news came out that Microsoft was buying it up or buying a stake in it, you'll notice that after that news came out, you almost couldn't use it, right? You had to swap over to the Playground and use that one because the regular one was just bogged down. Their servers were overloaded with the amount of people trying to use it. So the cost to run it is a bit prohibitive, and the amount of power required to power it is a bit prohibitive. So if they didn't need to fire it up and bring it out, then they weren't going to, especially if they didn't have the eyeballs for, you know, they're being able to justify it. And now they do. And I believe there's a conference this week where Google's going to be coming out with maybe rolling some of these features out, showing that they're not getting trumped by Microsoft. They haven't been caught sleeping, right? They've been working on this behind the scenes for a long time and are ready to go with a lot of programs and apps and features now. And that includes image software on the AI side, very much like Midjourney. And then on the search side, a little bit like using Chat GPT for search. So it might be worth taking a look at Google for maybe a long play, right? Think about how revolutionary this technology is. In the article, they brought up a good point, and I know I've used this phrase in my life. When somebody asks me what I consider a pretty obvious question, I tell them to go Google it. It's synonymous with go look it up for yourself. Google is what everybody thinks of. If they think, man, I got to go look this thing up, I got to go Google it. So their name is completely attached all around the world with the idea that if you need to look something up, you need to Google it. They own that space for over a decade. And it now looks like they're going to be owning this new space in AI. It absolutely is a verb now. And if we think about how revolutionary this is, this would be like going from horseback to trains, or from the A1 Ford to a Ford Tempo nowadays, or a Ford Mustang. I think it's worth looking at, as at the very least, it's worth being prepared for this week. I'm going to dig up that article so that I can at least link in the chat where the at what time and what day this week that it will be that they'll be doing their investor event. That way you guys can at least be prepared for that, right? And you'll probably find it either on my Twitter, or I'll put it in the description on this particular morning briefing. All right, so thank you for reminding me of that. I had mentioned it over the weekend with my wife that we were probably going to put more. This will be the first basically tech. I know Google's not necessarily tech, but it'll be the first tech name in our longer term portfolio in over 2 years. But I like it. Think I might start nibbling around the edges and building a position on this. The smaller AI companies were also worth a look. Like I said, they were nearly penny stock level. I'll have to dig them up. I believe it came from a Seeking Alpha article. The one with the L. Although, I mean, really, either one is fine, right? But I tend to always look at the one with the L. A long time ago, when I was trying to define which one of those I wanted to use, I was looking at liquidity. And at the time that I was looking at it, the L had more liquidity. Now, I haven't made the comparison in a long time. But if I was trying to make the decision now, which one should I look at, GOOG or GOOGL? My first thought would be, which one has the better liquidity? Liquidity is always the first thing that I think about. So which one has the better bid-ask spread, which is directly connected to liquidity? Which one has more eyeballs, more traffic, more players? And that would be the one that I want. If that doesn't do it, then I would look at any distinction between share volume and share size, market cap size. And I would just keep making that comparison on any data point and any metric all the way down the line until something stands out enough for me to say, I like this one over that one. Netflix is still on the contrarian list for 2023. And so far, I mean, it's doing relatively well. The gap is closed. So we had mentioned this really big gap back here from May. That's finally done. We still got a market maker move. We've still got continuation after that earnings. And we're going to be moving into a resistance right below $400. And I think that's going to be a level that's going to be hard to get through on Netflix. Bigger picture, you know. Another one that has a long ways to go is PayPal, but it's working on it. That was a massive gap up. And right now, what I'm really trying to define here is, are we going to get an island reversal? So when we have this kind of gap, it creates an island. If we hang out there for more than a day, anyways, it creates an island. So now we're looking for an island reversal, which would be a gap back down into this level. If it just grinds back down, then it's not an island reversal, right? We gapped back here and we kept it, right? So this looked like it was going to start to be an island reversal, and then it just kept on going anyways. PayPal is one of those that kind of fell off the scene. Not a lot of people continue to keep their eyes on it, but it's starting to come back around. I like it. It doesn't match the Netflix in recovery, not yet, but it's moving in the right direction. The other one was Meta on that list. And certainly it's been working its way back. It completely overtook the lines that we had defined for earnings. The move on earnings, they said, was the third biggest in the history of earnings moves that it had made. And Netflix, Meta, and there's another one. They're known for big gaps at earnings. And oh boy, this was a biggie. The third biggest in its history. But at this point, I mean, you know, the phrase overbought just doesn't quite do it justice. It is well extended past the 10. You have to have some inclination at the very least that it's going to hold this range. I'm not saying it's going to dump, but that 10 has to get caught up with price one way or the other. Either price comes down to meet it, or price stays put and lets the 10 come up to it to get a little bit of a reset after this big move. And out of those three, Meta and Netflix were the highest on the list for the contrarian 2023. Chip stocks did really good on earnings, and the bleed over from like AMD was pretty fantastic. This continues to be a sector and an industry that has not been beat down the way that all the others have. And so for a lot of people, this is still like the best short that you could find as a space, shorting semis. I don't have the feel for it. It does not seem like a good short just because it hasn't fallen. Like that's not a good enough reason to short it. It's certainly a good enough reason to keep your eye on it for a potential short. Because if I'm going to short the market, say we start going back down, the S&P starts heading to the downside, everything's going to go down. And semis have a lot more to fall than everything else. So I get that. That makes it a good short if we're shorting the market. But from everything we continue to look at, we shouldn't be short the market unless you're individually picking the names to go short in, not just broadly going short the market. So things are still looking pretty good. I would continue to watch the news today on that balloon business. Honestly, not expecting too much to come out of it, but it would only take one headline, right, to get a substantial, drastic move in one direction, even if it doesn't stick. You know, it could be nothing more than 30 or 40 minutes and we just come right back to normal again. Otherwise, keep track of the calendar, because every data point right now between now and the next FOMC is going to be scrutinized in excruciating detail. That's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.